Hi, Assalamualaikum and good morning. Okay, let's do together this question. First of all, let me explain on how to answer these questions. Okay, Aafifa Beauty Sdn Bhd is an established manufacturer of a wide range of beauty products, including skincare and traditional herbs. The company has several autonomous divisions, which include skincare division and herbal division. The skincare division produces and sells variety of skincare products, meanwhile herbal division produces and sells traditional herbal products. As the company's policy provides all investment center a divisional autonomy, both divisional managers of skincare division and herbal division are given freedom to choose their sources of purchase and sales. Currently, herbal divisions sells its product externally at price of 300 per packet of 1 kilogram. That means one packet consists of 1 kilogram, and then they sell to external customer at 300 per packets. In addition to an external market sale, herbal division also accept internal order from skincare division. That means on top of selling the product to external market, herbal division also sell the product to skincare division. Based on all agreement, herbal division agreed to transfer its output to skincare division at variable cost plus 50% markup. Okay, you need to understand the difference between profit markup and profit margin. In order to encourage internal transfer of goods, herbal division agreed not to charge selling and distribution cost to skincare division. That means herbal division, they will calculate selling and distribution cost for external market only. If they sell to external customer, then they will determine selling and distribution cost. Okay, below are the standard cost per packets of 1000 kilograms of traditional herbs product. Remember, traditional herbs produced by herbal divisions. They give us direct materials 100 ringgit, direct labor 20 ringgit, production overhead 15 ringgit, variable selling and distribution cost 5 ringgit. Okay, so production overhead 15 ringgit. We need to read further so that we can get information regarding how much variable production overhead. The herbal division is currently operating at full capacity with 3000 packets produced. Okay, that means at 100% capacity, herbal division can produce 3000 packets of herbal product. And sold every month. Okay, 20% of production overhead is fixed. Alright, 20% of production overhead, that means this is your production overhead, 20% is fixed. Okay, so fixed production overhead is actually 20% from 15 ringgit, which is equivalent to 3 ringgit. Variable production overhead, okay, 80%, the balance multiply by 15 ringgit, then you will get 12 ringgit. Okay, now you can calculate variable cost, okay, for herbal products. 100 ringgit, you plus 20 ringgit direct material, and you plus 12 ringgit variable production overhead. So total is 132 ringgit. Right, and then remember how much they charge for internal transfer of goods based on variable cost plus 50% markup. So variable cost is 132, variable production cost, then we plus another 50%, or we just multiply by 1.5. Therefore, based on current practice, transfer price they set at 198 ringgit per packets. Okay. Next paragraph. Currently, 50% of skincare division's requirement for herbal ingredients was supplied by herbal division, and the balance supplied by external supplier at 300 ringgit per kilogram. Okay, that means 50% they buy internally, another 50% they buy from external suppliers. So when they buy internally, they will pay according to the agreed transfer price as we calculate just now, which is RM198. Each unit of skincare product requires 10 grams, okay, herbal ingredients. Below are the data for skincare divisions for the months. Current production is 210,000 units. Remember, each unit requires 10 grams. So from here we can calculate actually how many grams herbal ingredients required by skincare divisions. Okay, 210,000 kilograms. One unit, they will use 10 grams, okay, 10 grams of herbal ingredients, and then you convert into kilograms. One kilograms equivalent to 1,000 grams. Then you will get 2,100 kilograms of herbal ingredients required by skincare divisions in order to produce this amount. Okay, and then just now 50% will be supplied by herbal division. Okay, only 50%. So 2,100 kilograms you multiply by 50%. Actually, they will buy internally 1,050 kilograms, and then the balance another 50% they buy from external supplier. So when they buy from external supplier, definitely they have to pay 300 ringgit per kilogram. Okay, total actually they have to pay 315,000 kilogram. Okay, now we read further. Direct materials excluding herbal ingredients 3 ringgit, direct labor 5 ringgit. Okay, before that selling price is 30 ringgit per unit. Production overhead 40% variable. Total production overhead is 15 ringgit per unit. So 40% variable means 40% you multiply by 15 ringgit. So you will get how much? You will get 15 multiplied by 40%, 6 ringgit variable. So the balance, okay, the balance means 9 ringgit is actually fixed production overhead. Okay, last paragraph, the finished product of skincare division are highly demanded. Okay, thus Miss Dia, the manager of skincare division, is planning to increase its production capacity. They want to increase production capacity for the following months by 30% to reach its maximum level. It is policy of the company to absorb fixed cost based on full capacity. That means when you calculate fixed cost, you must calculate based on full capacity, even though they are operating below their full capacity. Okay, first requirement, based on current policy. Remember current policy, how do they charge, how do they set transfer price? Okay, when they transfer goods internally, they set at variable cost plus 50%. Evaluate the performance, okay, of each division and company as a whole for current months. B, using general rules of transfer price, determine minimum transfer price. And then C, advise the management of Aafifa Beauty on the impact of profitability for each division and company as a whole if Miss Dia proceed with her planning, assuming 50% okay, of skincare division's requirement for herbal ingredient will be supplied by herbal divisions. Okay, so as usual, first of all, you need to identify sales revenue. Okay, let's answer the first one. So first you calculate, just now we already calculate variable cost, and then we already calculate based on current practice, transfer price is 198 ringgit. Alright, now you draw 4 columns, one column for particulars, okay, another column, second column for herbal divisions, third column for skincare division, and last column for the company as a whole. Okay, remember herbal division in this case is considered as selling division, and then skincare division is our buying division. So for transfer price, when they transfer goods internally, herbal division will record as revenue, whereas skincare division, they need to record that amount as expenses. Alright, so external sales just now maximum capacity for herbal division. Currently they produce at maximum capacity, which is 3,000 kilograms. So if 1,500, okay, if 1,500 they need to supply to skincare division, that means the balance the balance is 1,950. They can sell to external market. When they sell to external market, they charge at 300 ringgit. But when they sell internally, they charge based on transfer price. Okay. And then for skincare division, 1 unit total production 210,000 units. You multiply by 1 unit 30 ringgit selling price. Then you calculate total sales revenue. Okay, this is total sales revenue for herbal division. This one for skincare division, and then this is for the company as a whole. And then don't forget to transfer this figure, okay, to skincare division under expenses. You can call it as internal transfer, or you can call it as herbal division supply by herbal ingredients supply by herbal divisions, or internal transfer of goods. Just copy back the amount. The balance, remember they buy from external supplier, they have to pay 300 ringgit each. Okay, and then you calculate your variable production cost. For herbal division, you calculate based on total for external and internal sales volume. If you total up this figure, you will get 3,000 kilograms. And then just now we calculate variable cost. Okay, variable cost 132. You can show it separately. Okay, whereby you can list down direct material, direct labor, variable production overhead, how much. You can calculate separately. But finally, if you total up, you will get this value 396,000. And then for skincare division, okay, for skincare division, you calculate variable cost for skincare division 14 ringgit. 14 ringgit. That means your direct material excluding herbal ingredient is 3 ringgit, and then direct labor just now 5 ringgit, and then you have variable production overhead 40%. Okay, 40% from 15 ringgit you calculate earlier, which is 6 ringgit. Okay, so total is actually 14 ringgit. Okay, total 14 ringgit. This one also you can show separately. Direct material 3,000 multiplied by 210,000, you can show separately. But finally, if you total up, you will get 2,940,000. Okay, and then you calculate your selling and distribution. Remember, selling and distribution cost, this one you charge based on external customer only for herbal division. Okay, and then you calculate your contribution margin for each division and also company as a whole. Okay, then you minus fixed production cost. You minus your fixed production cost. Okay, so when fixed production cost, if you look at last sentence, last paragraph, it is policy of the company to absorb fixed cost based on full capacity. So you calculate fixed cost based on full capacity. Okay, so full capacity for skincare division is 300,000 actually. 300,000. Finally, you can determine your net profit for herbal division, skincare division, and also company as a whole. Okay, net profit for the company as a whole in this case is actually 505,250. 505,250 net profit for the company as a whole. Combination of these two. Alright, then second questions, requirement B, determine minimum price based on general rules. Remember the equation, based on general rules, minimum price equivalent to outlay plus opportunity cost. So opportunity cost, we look at selling division's point of view. In this case, we refer to herbal division. If they sell to outsiders, how much contribution margin they can generate? Okay, how much contribution margin that they can generate if they sell to outsiders? And then outlay refer to variable cost for herbal divisions. So you need to identify, is there any opportunity cost? So that means if they supply extra to skincare division, they will let go. They will need to they need to reduce volume that they sell to outsiders. So when they reduce quantity for external market, that means they will not get contribution margin from external market. Therefore, there is opportunity cost in this case. So up to outsiders, herbal division charge 300 ringgit. And then variable cost for outsiders, remember direct material, direct labor, variable production overhead. And then you also have selling and distribution, variable selling and distribution cost 5 ringgit. Then you minus, so contribution margin 1 kilograms, 1 packets herbal division will get 163 ringgit contribution margin. So if they supply extra, originally they supply 1050, and then when production increase, okay, when production increase to maximum capacity, whereby 210,000 is actually based on 70% capacity. So if they want to produce according to maximum capacity, they will increase the volume to 300,000 units of skincare. Okay, so that means volume increase from 1050 to 1050 to 3000. Okay, wait, to 3000, not 1020 to 3000, actually 2100 just now to 3000. Okay, so remember 3000 is maximum, 300,000 is maximum. To produce 300,000 skincare, they will need herbal ingredients 3000, but only 50% they buy from herbal division. So 50% means 1500. So if you increase the volume from 1050 to 1500, that means you increase by 450. Okay, you increase by 450. So 1 unit you let go 163. If 450, you will let go this amount. So when you determine minimum price, okay, this is your variable cost. Variable cost for herbal division, remember excluding what? Excluding selling and distribution, because for internal transfer of goods, they will not charge selling and distribution cost. Then you minus this is actually contribution margin 160, not minus, you plus in order to calculate your minimum price. So finally your minimum price should equivalent to 295 ringgit per packets or per kilograms. Remember, 1 packets 1 kilogram. Okay, then requirement C. Advise the management of Aafifa Beauty on the impact of profitability if they proceed with Miss Dia's suggestion. That means they want to increase the supply for internal goods. Okay, they want to increase herbal ingredients supply to skincare divisions. So when they increase this amount, because skincare division plan to sell at full capacity, so when they increase this amount, external sales volume, you need to reduce. This one increase, this one decrease, and then this will affect, okay, your selling and distribution cost as well. All right, so if they increase by 1005, That means herbal division can sell the balance only to external market, because currently maximum is 3,000 kilograms. So you supply internally 1,005. That means balance 1,500 you can sell to external market. So because of that, you calculate selling and distribution cost based on 1,500. Okay, and then this amount don't forget to transfer to skincare division under expenses. So the balance they will buy from external supplier. Okay, they will buy from external supplier. Finally, you calculate net profit. Okay, you calculate contribution margin, and then you calculate net profit. So if they increase the volume, okay, if they increase the volume for internal supply, okay, if herbal divisions increase the volume for internal supply, their profit will reduce from 378,150 to 334,500 ringgit. Okay, why? Because they need to let go their external sales volume, whereby external sales volume they can generate can generate more contribution margin. Whereas for skincare division, their profit will increase from 137,100 ringgit to 1,353,000 ringgit, because of two reasons. Okay, they increase their production at full capacity. So when volume increase, definitely their net profit also will increase. And then furthermore, they buy more, okay, from herbal division. They pay at cheaper price as compared to external supplier. And then as a result, okay, profit for the company as a whole also will increase from just now 15,250 increase to 1 million, okay, 687,500 ringgit. Okay, increase to 1,687,500 ringgit. This will be your comment on these questions. That's all. Bye.